Hi everyone. In this video, I'm going to answer which one of these three stocks is best for investors looking at high risk, high return growth stocks. So these are risky growth stocks that have the potential for really high returns, but they come with really high risk. So the three I'm going to look at is DraftKings stock, Skillz stock, and Carvana stock. I'm going to look at four different metrics starting with revenue. So let's get right into it. DraftKings, as you see here, has been increasing revenue very nicely from less than 100 million in before July of 2020 up to 855 million in its most recent quarter as it's been expanding. It's an online gaming company, so it needs to get approval from each additional state to enter the market, and it's been doing a good job, slowly adding new states to its repertoire. Skillz was doing an excellent job growing. However, the economic reopening really halted its momentum and revenue growth has turned negative, and it went from 100 million in revenue at its peak down to 60 million in its most recent quarter, and I suspect that to continue falling as the company has had to reduce its expenses significantly, decreasing its sales and marketing expense to better align its growth versus profitability prospects. Carvana had also done a really good job during the pandemic as new car manufacturers faced supply chain shortages. Used car sales soared, and Carvana capitalized on that trend, peaking out at revenue close to 4 billion for the quarter. That's been coming down also 3.386 billion of revenue in its most recent quarter. This is trending downward, however, and used car prices are coming down, and as supply chain shortages are easing, new car manufacturers are ramping up production, and that's being a headwind for Carvana here in the near term. The next metric I wanted to look at is operating income. I wanted to look at how these companies are doing in terms of profitability. And DraftKings has done a nice job over the last several quarters in improving its losses on the bottom line. Its losses peaked at about 600 million in operating income in a quarter. That's improved to just a loss of 232 million as of its most recent quarter. Skillz as well has done a nice job of saying, you know what, I mentioned earlier, they reduced their sales and marketing spending, and that's helped reduce the losses on the bottom line, improving to losses of just 27.7 million in its most recent quarter. Carvana has made less progress in improving its losses. However, they've also significantly slashed expenses, and they've reduced losses to 297 million in its most recent quarter. So all three of these companies are losing a lot of money on the bottom line, and that's why I noted in the beginning of this video, these are high risk, high return growth stocks. It comes with when companies are losing this much money on the bottom line, they are tremendously risky. The next metric I wanted to look at is cash flow from operations, and what we have here are annualized figures. And starting with DraftKings, this has been moving in the opposite direction, losing 625 million in cash flow from operations. Skillz as well going in the opposite direction, losing 180 million, and then Carvana making significant losses, accelerating, going from losses of just over 800 million in cash flow from operations all the way down to cash flow from operations losses of 2.6 billion, so more than tripling the rate of losses, and that's perhaps going to get worse as it's having a hard time unloading its inventory that it paid. Remember, Carvana buys and sells used cars. So during 2021 and early 2022, when it was buying used cars, it was paying premium prices for it. Now that prices have fallen, it's having a hard time selling them at the prices it paid. So it needs to either accept significant losses on the cars that it bought over the last 2 years, or hold them on its balance sheet and lose cash flow from operations. It's in a really difficult spot here. So finally, I wanted to look at valuation to determine which one of these stocks is the best one to buy. DraftKings is the most expensive, trading at a forward price to sales ratio of 2.777. Skillz is the next most expensive, trading at a price to sales of 1.029. And Carvana is the least expensive, at least on a forward price to sales ratio, trading at 0.060. So a significantly lower price than these other two companies, and that's because Carvana comes with significantly more risk, right? Because it's in liquidity crunch, it's losing so much cash from operations, it's needing to take on these drastic measures to try and shore up its balance sheet to try and bring in cash, and that's not good for the business prospects. So if I had to pick one of these high risk, high return growth stocks to buy right now, I would say DraftKings is the best one to buy. Its prospects are the the best out of these three stocks, right? It's expanded into several states, and once it expands into the state, then the expenses are significantly lowered because it doesn't need to make all those investments for the opening, the initial opening. So, for that reason, out of these three stocks, I would say DraftKings is the best one to buy right now. Now, remember, these are all high risk, high return growth stocks, so don't venture into any of these three unless you're willing to tolerate very high levels of risk. Okay, that's all I've got for this video. As always, I truly appreciate your viewership. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.